Good evening, everybody. I'm Bill Griffith, in for Tyler Matheson tonight.
And I'm Susie Garib. Good evening from me as well. Well, more Americans are back on the job, at the office, at school, at the mall, and at construction sites all across the country. And that's raising expectations for a strong June jobs report from the Labor Department tomorrow. Now, payroll firm ADP reported today that private sector employers added many more new workers than expected, and the most new jobs added in 1 month since November of 2012. Gains were seen in every sector of the labor market, with small firms, those with fewer than 20 employees, hiring the most. Hampton Pearson has more on today's encouraging numbers and what to expect in tomorrow's report.
One day ahead of the June jobs report, optimism among leading economists is at a 4-year high. The consensus forecast sees the economy adding 215,000 jobs last month, boosted by today's headline. The private sector may have added 281,000 jobs. That's according to payroll processor ADP.
It was everywhere. The gains were broad-based. Every single industry added to payrolls. Every company size added to payrolls. It was uniformly strong. And, you know, just looking at the underlying ADP data, it looks really, really good.
Market watchers are hoping job growth can sustain its momentum. The labor market has added more than 200,000 jobs in each of the last 4 months, the best performance since the late 1990s. It's a contrast to disappointing economic data showing a nearly 3% GDP contraction in the first quarter and less than expected consumer spending in May.
Well, the one wild card has always been the consumer. Nothing is really sustainable in terms of all the other components of GDP unless you have the backdrop of consumer spending, which means not only do you need employment, but you need income being generated out of that employment.
No hint from Federal Reserve Chair Janet Yellen today about how another strong jobs report might impact the Fed timetable for raising interest rates. Yellen telling an International Monetary Fund conference a big part of the Fed's communication strategy is to avoid surprising financial markets.
We will try to conduct our monetary policy to communicate about it and to conduct it in a manner that is understandable to financial markets, to avoid the kinds of surprises that could cause jumps in interest rates.
The jobs report is coming one day early because of the 4th of July holiday. Will there be fireworks? We'll have to wait for the numbers to find out. For Nightly Business Report, I'm Hampton Pearson in Washington.